sometimes what the business appears in the front is not what the actual business is all about. Let me give you an example. Let's say that you look at a restaurant, and as somebody who just goes and eats in restaurants, and I do the same, I don't have any experience in running a restaurant or anything like that. For us, the business of restaurant is all about the food. However, clearly, it is not just about the quality of the food. The number of restaurants that survive every year is very small relative to the amount of restaurants that gets open. So not all of them have bad food, but the business of restaurants is not only about food. It's about knowing how to run your inventory right, running your staff right, taking care of expenses and anything that has to do with the business. And as many of you would tell you, the one component that there is a real upgrade on, where majority of the restaurants, from my understanding, make their business is really on the wine and the alcohol that they serve in the restaurants. It's not necessarily on the food. So again, when somebody comes and he looks at the restaurants, it might be all about the quality of the food, but there's just so many things that are going around that would be always a big factor on the success of the company. I could use a second example and talk about a car dealership. Well, on the surface, it looks like it's the business of selling cars, but in reality, it's the business of financing and interest rates, which reflects in leasing or selling a car and moving the inventory. So yes, of course, you're going to get a car at the end of the day, just like you get food in a restaurant. But again, there's so many things that are happening behind the scenes. So when you go to a car dealership, that's why different people get different prices. And at the end of the day, your deal will be a reflection of your negotiation skills and knowing what kind of deal you can get on a very specific car. And obviously, that's why it varies. Prices would vary from one consumer to another, even within the same day on the same car. So now we're going to talk about the business of trading. So what is the business of trading? What is it on the front? On the front, it's the business of making money. What is the business really all about? It's the business of managing risk. Now, imagine me standing in a stadium and trying to teach people about trading and walking on stage and yelling, "Who wants to learn about risk today? Who wants to manage risk? Who wants to get into the business of manage risk?" I think everybody would just buy a hot dog and leave, and I would be talking to an empty stadium. But that's the reality of trading. It's really about managing risk. Now, the way trading is being sold in the industry, it's being sold as an investment, it's being sold as a return. Think about all the the mentors out there. Maybe some of them are mental, but with the returns that they project, learn my method, and in 2 hours you can make $500 a day. And with my specific method, it's accurate to 79.79%, right? As if they really did that research to specifically say that it's going to be that successful. So again, the idea is being sold as returns and making money. So I'm not here to discourage you. Obviously, I never want to discourage you from trading. However, I believe that the people that know what the business is really all about and have the right perspective on the business will have a better chance at this game. So if the idea is to manage risk, the perspective of trading takes a completely different form and a different shape on day to day. So now you're going to think twice before you enter a trade, not because you are necessarily because you're risk averse, and you could be risk averse, but essentially you're not taking every trade out there because you want to manage risk and you want to go with trades that are basically, in your opinion, have better odds of making you money. And you avoid the spontaneous decisions because you know the spontaneous decision is not the aspect of managing risk, right? So everything you do is about managing risk. You don't get into the business of FOMO. If the market shoots up, you don't regret that it went up. When it goes down, you don't regret that you shorted. You don't start chasing it, right? So you start thinking, which action am I taking here that I actually manage risk? Now, obviously, at some point, you have to take a trade. That is given. If you have no risk, you'll have no reward. But the way you manage things and the way you approach things and the way you analyze things will be from a risk perspective. So let's take an average day for a trader, right? And again, not coming from a place of criticism, but let's say somebody who starts trading. So they develop some sort of a plan and they go into the market and the day could have been wonderful, right? And they end the day and it's great. But let's say the day wasn't so wonderful and it didn't start off so well. So what happens? Then you're trying to recover your money. And when you try to recover your money, then now you're saying, okay, I want my money back. So this is not managing risk. This is more of a feeling, instant, kind of an emotional reaction to things. And then you say, you know what, I lost this time too. Let me try and recover again. I'll do it with a bigger number of lots because I want to make it back. And again, you're asking yourself, is this a risk managing type of scenario? Again, I'm in the business of trading. I'm in the business of managing risk. Is this business, is the action that I'm taking right now of going with a large number of lots is managing risk? And pretty much you're going to say yourself the answer is no. So this is how it takes a completely different perspective. Now, let's say that the trading day is over. You can say, all right, well, let me analyze my charts. Let me see what I'm going to do tomorrow. And I'm going to go over the levels and I'm going to see what I'm going to do when the levels are going to hit tomorrow with those levels that I analyzed. Again, that's a risk perspective because you actually are not looking to be spontaneous. You're actually pre-planning your trades. So that's also a risk perspective. Then analyzing what you've done throughout the month, judging your good days, your bad days, adjusting your parameters. Again, always from a risk management perspective. And that's what I think the business of trading is all about. I know when we look up to traders or big investors in the industry, we always look at the risk side that they took. We don't look at their conservative side. We always look at, the side that is exciting, where they get to say, put so much money and this is the return that I've made. And if you look at their overall trading careers of very, very successful traders, you would see that they're always talking about, that one outlier that made them a lot of money. And it happens to people that are disciplined. This is my opinion, that I believe that people that are disciplined periodically in their life, when they manage risk, will hit very, very big trades. But they never know that it's going to be a big hit, right? They never know that that's going to be the trade that make them a lot of money. So, for example, if you look at the career of somebody like George Soros, where he has a fund and he's making money and returns. Everybody talks about the $2 billion I think he made in the British pound, where he bet a lot of money and it gave him a very big return. And everybody says, he's a great trader as a result of that. But the reality is that people like him don't get to be where they're at if they don't manage risk. So nobody talks about behind the scenes of the deals that didn't go well, about the failures that have occurred in a long-term career where you have to cut your losses short on some things that didn't work. You have guys like Carl Icahn, that everybody talks about what a great trader he is. And during the Trump election, he left and he went when the market was tanking. He went long and he made a lot of money on the S&P. But the reality is we always, and me too. I mean, I'm not any different than anybody else out there. That's why I never criticize people, because those are mistakes that I see sometimes in myself. but I know how to notice them. I'm just very self-conscious of when I look at things in a perspective that I shouldn't. So again, going back to, those kind of one-off events, everybody talks about that, and they think this is what trading is all about, is that having that ability to recognize an ongoing opportunities out there and go in. And nobody talks about, again, the stuff that you have to manage day to day, that it's mundane, and to think about the risk and avoid the unnecessary risk. And yes, part of avoiding risk is sometimes living with regret. That's really what it is. Sometimes there will be trades, but you learn to live with it. You learn to overlook it and say, okay, I didn't take advantage of it. It's fine. Tomorrow is a new day, and I can always look at a new opportunity and not chase markets. Because again, chasing market is not an action of risk management. So I hope this perspective will help you as you go forward in your day-to-day. Again, ask yourself the question, am I managing risk? Every question should be, am I managing risk? And of course, along with that, you take the trades when you should be taking them, because that's also part of the other side of risk, is having the ability to actually execute when you do see the opportunity. That's it for now. Just reminding everyone that trading futures is very risky. I don't downplay the risk that exists in futures trading. It's a leverage market. It can make a lot, but you can also lose a lot. Therefore, you should never trade capital that you can't afford to lose. If you're trading with very little capital, if you could potentially lose more than your initial investment, it can happen. So again, as this disclaimer says, there's a substantial risk of loss in futures trading. Past performance is not indicative of future results. I wish you well. I wish you a great day, a great week, and I'll see you on the next podcast. Thank you.